Taylor Riggs, co-host of The Big Money Show, and John Carney, economic and finance editor at Breitbart News, co-author of the Breitbart Business Digest. Thank you, kids. Appreciate it. Taylor, you had admitted it's a hell of a rally, really. I mean, really. Let's do stocks first. We'll get to Bitcoin.
I know. When you say a rally, I don't know which rally you're talking about, Larry, because we've been doing Bitcoin all day. But let's talk about the broader stock market, right? Some of this could be NVIDIA, which, again, reported incredible earnings last night. Revenue goes up 94%. Profit doubles. It goes up 100%. But this is broader based than you just say. It's that Trump rally. This is so similar to what we had in 2016. Small caps, right? The domestically focused companies that don't sell goods overseas but are so tied to the strength of the U.S. economy and a strong dollar. That's why the small caps, as you mentioned in the riff, has also done well. So I think this is more than just a big tech story, an NVIDIA AI story. This is sort of this broader relief rally that we have common sense back in the White House. We have maybe lower interest rates, again, fueling this. And we'll have to see how companies can react and boost up profits, hopefully return some of those profits to employees and shareholders.
Yes, they will. It happened once. It can happen again. You can't have a good company and you can't have good pay unless they're making money with profits. John Carney, let's dwell a moment on the Bitcoin story. All right. So Mr. Trump made it very clear during the campaign that he was the cryptocurrency guy. All right. As Charlie Gasparino reported, and perhaps others, there may be a cryptocurrency czar in the White House. Maybe, maybe not, but it's a possibility. Anyway, everybody knows he favors that. That's one important point. And so Bitcoin keeps rising. Now, there may be other reasons, and I'm not sure I really understand all Bitcoin and cryptocurrency, but maybe you'll both give me some wisdom. You first, John.
Sure.
Carney.
The Biden administration was really antagonistic to cryptocurrencies, and Bitcoin in particular. They were going after anybody who had a business plan centered around them. And this surprised people when they were running back in 2020. They did not run on, we're going to crack down on cryptocurrency, and yet that's the way they behaved. So taking them out, I think, has been a big relief. People now are no longer looking at the idea that you won't be able to trade cryptocurrency without getting the SEC crawling down your throat.
Just to pause one moment. Gary Gensler at the SEC apparently was very much opposed to cryptocurrencies.
That's absolutely right. And that was one of the things that was really holding back cryptocurrencies. One of the things we're seeing in Bitcoin, in stocks, is really a surprise rally. People, remember, we went through this once before on the show. The CFOs of the world, a lot of the business leaders did not, the people thought Trump would win, but a lot of the business leaders did not think Trump would win. So what we're seeing is a rally as everybody suddenly realizes an upside that they didn't see coming.
By the way, Gary Gensler of the SEC announced today that he is going to step down from the SEC effective January 20.
Well, that's
so
bullish.
He's sort of gotten the message that this is...
When did he announce that?
Today, a couple hours during our show.
Wow.
You were on our show when he announced it, Larry.
How about
so again, you sort of have this feeling that, you know, people in crypto and sort of want a new regulatory regime, and it's sort of that overall lower regulation that maybe allows people like Brian Armstrong of Coinbase to meet with the president. So
just take a deep breath for one moment. Later in the show, we're going to run a wonderful interview I had with Ted Cruz, Senator Ted Cruz, who's a great friend of ours. We taped it about an hour or so ago. And he's a big cryptocurrency advocate. And he mentioned in the course of this interview that he was a crypto miner, or he owned crypto mines. And I said, gee, that's wonderful. But when I said that, I realized I don't know what he's talking about.
I'm going to steal your line. It's a bunch of servers with big air conditionings because the mining is all electronic.
Right. So what you do is you set up a giant server farm, and then you have to have a lot of air conditioning because it gets very hot. But what that means is you need a lot of electricity.
Right.
The AI revolution, the cryptocurrency all require a lot of electricity. We need to be energy abundant and energy dominant. That's another reason, I think, frankly, that we're seeing these rallies, because people say the war on fossil fuels that was waged by the Biden-Harris administration is over, and the American people want it, and we get to have energy again.
So they're self-reinforcing. So on the one hand, Mr. Trump does not wish to overregulate cryptocurrencies, okay?
Right.
On the other hand, he does wish to produce more energy, electricity especially, could come from natural gas, at lower cost. So that would be good for the cryptocurrency miners.
Yes.
That would also be good for the rest of the country.
Yes.
That would also be good for the blue-collar boom, and that would also be good for better take-home pay after
Yes.
inflation.
Let's talk about the real wages, right? Because that's been such a story for Fox Business as a network, is the affordability crisis. You talk about that all the time, Larry.
I coined the phrase.
You coined the phrase. You also coined my King Dollar phrase. So I'm coining a lot of things from you. But look, when you think about the way it can impact people at home,
Right.
lower energy, as you mentioned, goes into everything. So if that impacts how much I take home after inflation, that means I know you want to argue that prices need to go back down to where they were. But as long as my pay outpaces inflation, I may not need prices to go back. I just need to be taking home more than inflation.
John, okay, that's a very important point. And I think people at this point believe Trump. You know, Trump in his victory speech, and said it on the campaign trail, promises made, promises kept. That was one of his key themes in the last few weeks of the campaign, along with success will end the divisions and unite the country. But I think at the moment, certainly the stock market is signaling, flagging to everybody, they believe there are going to be tax cuts. They believe there's going to be deregulation. They believe that prices can come down. And they believe that we'll get more electricity and power at lower cost and so forth. And I guess they believe him certainly on the cryptocurrency front. So I'm just saying the market is, in a sense, validating so far, looking at the transition, and there's some big jobs that have yet to come, but I think we'll hear about Treasury and NEC and OMB in either hours or days, something like that. But the market buys it. That's what I'm getting at. It seems to, is buying it.
That's right. Look, and if you look at surveys of public opinion, you'll find that when people are asked the question, will you be better off a year from now, that number has gone way up since the election, particularly among young people and particularly among people who have lower incomes. They thought they were in for a raw deal. They know how bad affordability really crunch them. They can't buy houses. They can't afford cars. They can't afford to just turn on the lights in their own houses and apartments. That has shifted dramatically in all of the polls, shows 18 to 29-year-olds. Now they have net favorability ratings for both Trump and Vance. And when you ask them, will you be better off a year from now? Almost half of them say yes. About a third of them say, well, I think I'll be around the same. But that's a lot better. Just a few months ago, those numbers were reversed, where more than half said, I'm going to be worse off.
And I'm so interested, Taylor, I know you follow this very carefully. The vast majority of economists are telling us how bad the Trump policies are. And there's going to be sky-high inflation because of his tariffs. And, oh, my gosh, he might defend the U.S. against unfair trading practices. So now it's the economists against the voters, as John just said, the people, and economists against the marketplace. So why don't economists wise up?
Could the models be wrong, right? Garbage in, garbage out. It's my new version of FIFO and LIFO, right? But the problem is, and I think you brought it up, is you're already seeing it in some of the real people on the ground. So we had the business special earlier, and we interviewed a restaurant owner. He said the day after the election, sales doubled. The relief rally was here. The policy has not changed. The policy will not change until January 20, but that sense of relief. We talk about consumer confidence all the time, right? It was high, so high during Donald Trump. The big gains that you've seen in consumer confidence right now are coming from future expectations, not present conditions. That is the hope on the horizon that we hope Donald Trump can bring. I
mean, John, economists are just totally out to lunch. I mean, you know what? Here's another point. Economists, if in the main, don't like cryptocurrencies. I mean, they're a very dour lot when it comes to that. And it's interesting, Friedrich Hayek wrote, the great Austrian economist who taught at the University of Chicago for many years, won a Nobel Prize in 1976, if I'm not mistaken. And he argued for competing currencies to keep the Federal Reserve and other central banks honest. The crypto revolution could be a competing currency.
Absolutely.
That would be a good thing, would it not?
It would definitely be a good thing. You do want to have competing currencies. You don't want your central banks becoming too complacent, which they did. That's one of the reasons why we had this inflationary explosion. If you have a market check on the excesses of central banking, which a competing currency and a cryptocurrency could provide, you'll be much, much better off. The economists have been out to lunch. I think they're going to be humiliated. They're all still, I mean, they already have been. They're all still saying there's going to be massive inflation.
Right.
Look, just yesterday, the Walmart had their earnings call, and there were headlines saying Walmart says they're going to raise prices. That's wrong. Walmart did not say they're going to raise prices. Walmart didn't become Walmart by being a price taker. They are going to go, if a tariff is affecting them, they're going to go to the manufacturers wherever they are and say, get yourself out of China. We want to buy your stuff cheaper. We are going to see the currencies shift. China's currency is going to go down further. The dollar will probably strengthen. There will be no higher prices because of the
You know that the economist fraternity community is kind of like that woman who did the poll for Iowa. Right. I don't remember her name. Maybe it's best that no one remembers her name. She was, she said +3 for Kamala.
Yeah.
And Trump carried the state by 13, I think.
Yeah.
And then she promptly resigned after the deal. So maybe all the economists ought to resign. I'm being a little cruel here.
You are.
I thought I'd put that in.
I love sort of the institution of economics because that's where I got my start. But I do agree that that business model no longer works when you're fundamentally out of touch with how people feel and how we deal on the ground. And guess what? We tried tariffs in 2016 and they worked. They worked so well that Biden didn't reverse many of the tariffs.
Right.
And guess what? Trump did it with what? 1.6% inflation on average, virtually nothing. So if we can do it once, maybe he can do it again.
Thank you very much. Taylor Riggs.
Don't hate all the
Carney.
economists.
No.
Just some of them.
It's not personal. It's not personal. It's just institutional. You can catch Taylor on The Big Money Show, along with her co-hosts, Brian Brenberg and Jackie DeAngelis. That plays weekdays, 1 p.m. Eastern, right here on Fabulous Fox Business.